Hello everyone, welcome to the ichimokucharts.com daily analysis for gold for Thursday, September 12th, 2013. Well, a continuation of the trend to the downside today, and we have this very large black body candle that has finalised trading for the period. Lower high and a lower low, therefore continuing that trend to the downside. Previous day's trading we had potential for the market to trade up. We had a small bodied candle. We had very strong price rejection from an area just above the Kijun-sen and from just above the 1350 level. Today the market has taken that level out and the Kijun-sen out in a very decisive manner, with the sellers taking very strong control of this market and showing very strong commitment to taking this market lower. The sellers have been that strong in this market. They've also taken out the 1329 level in a very bearish manner. The only problem here though is that the market seems to have done a lot of work in a short space of time, and as this current candle is developing, we're not seeing the market trade down through that low of the candle that has finalised trading. There is a possibility of this market continuing low. We don't have any signs that the market will change trend or will start trading up. And if it does continue trading down, we have support around 1309 and then around the round number level of support at 1300, and that coincides with the top of the cloud, and there is potential for that to be very strong support for this market. Over the next day or two, the market will be interacting with a thin part of the cloud and will be offering very little resistance. So if the sellers are very strong in this market and they build solid momentum in an approach down to this level, we could see them trade down through there and turn this market bearish in that long-term time frame. But we can't preempt the market at the moment. Let's see how the market reacts if it does trade down through that level or to that level. In terms of the Fibonacci extension, and here we've seen the market testing to the 100% level and failing to close down below there. There is a hint that we could see some buying coming in, and this current candle as it's developing doesn't look terribly strong in terms of the sellers. It's an indecisive spinning top candle but not finalised. Keep an eye on the 100% level. If we do see buyers coming in, then there could be potential for a change of trend. But certainly with the amount of short-term momentum to the downside with the sellers in control, certainly not likely that we will see a change of trend in this time frame or in the next day or so. The high of this current candle certainly is a long way away, and the buyers will need to be very strong to trade the market up towards that level. In terms of the Fibonacci retracement, we're in an expansive mode of that now. We've traded through the 100% level. The market was interacting with the 100% level the previous day. We were looking for confirmation, and this highlights very importantly how important it is that we get confirmation of a change of trend, and here we haven't seen the market trade to the high or through the high. We were looking for a higher high and a higher low. So anyone that may have gone long here based on this being a candle that was rejected from the 100% level would certainly be on the wrong side of that trade. Important to have confirmation of a higher high and a higher low here with this interaction. So it's good to read the short-term dynamics, but confirmation is really important. So now we have the market trading through the 100%, through the 161.8% in a bearish manner. This suggests that the market may trade to the 261.8%, which is at the round number 1300 level, so strong support there, and at the top of the cloud, the Kumo, and coinciding with it being the 261.8% level makes that level very strong support. In terms of patterns in this moment, we have had some sort of a head and shoulders pattern form here. Here's the left shoulder. It's a complex left shoulder with two shoulder types. Here's the head and the right shoulder in this region. We've drawn the neckline through here. We've had the close down below, confirming the pattern, and the target is this area here at the distance from the head down to the neckline, projected down from the breakout, and that's down around 1281. The only problem here is that the size of the pattern is really quite large compared to the trend leading into it, and does suggest that this it's not quite a perfect pattern. I prefer to see a smaller pattern in terms of this head and shoulders, or a very much larger trend moving into it, so just a little bit out of whack. But it doesn't mean that the trend, that the target may not be valid. The market will need to trade through that important level of support before it does reach the target. So when we consider that the confirmation is so far past the neckline, that there isn't really a lot of profit left in a trade based on taking the signal now after the close below the neckline, which is the way that these trades should be taken. That's the trading strategy. The stop will be placed up above the neckline here, so it certainly is too far away. The risk to reward ratio is really too great. In terms of how this pattern may play out, we could see the market retrace back up towards the neckline, which is the classic way for these patterns to develop, offering another chance to go short again, and that is a possibility of that happening, and then the market testing back down to these levels. So let's wait for that to happen. If it does, there is a possibility of that, considering how much work this market's done all in one trading day. In terms of Ichimoku, obviously still a bullish market in the long-term time frame, with the market trading above the cloud, but the cloud may come into play soon. We're not seeing any follow-through at the moment on this current candle as it's developing, so we could see the market just relaxing at the moment. The sellers are taking a bit of a break here. We are seeing 1329 act as resistance now to the market, so that will be a crucial area. And if we do see the market test lower, the cloud may offer a resistance down through the depth of it to 1292, so not a great depth of the cloud, and there is a possibility of a breakout down below the cloud, changing sentiment in the long-term time frame if we do see this market build some solid momentum to test down to these levels. In terms of the Kijun-sen, the market is now trading down below the Kijun-sen and in a very bearish manner, and it has been some time since we've seen the market test below and close below the Kijun-sen, so I think we have seen a very important change in sentiment in that medium-term time frame, and if this market does bounce, the market may most likely find resistance around the Kijun-sen. In terms of the Tenkan-sen, we saw that breakout down below a week and a half ago, the market retracing back up to the Tenkan-sen, finding resistance there and selling off, and once again trading around the Tenkan-sen and selling off. So the Tenkan-sen has been a very important area of resistance, and certainly has given us a hint that there was a change of sentiment in this market about a week and a half ago, especially with these very large black-bodied candles, and now we're seeing this follow through. So there is a possibility of this market trading to lower levels. Looking to the Chikou span, that's above the corresponding price action, so it's suggesting that there still is some upside momentum in this market. It is confirming what we're seeing in the higher time frame, but certainly not in the medium and fast term time frames, so suggesting that the market may find support somewhere and bounce back off. But before we even consider going long again in this market, we'd have to see the market trading up above the Kijun-sen and the Tenkan-sen, and we might not see that for some time. So moving forward, at the moment 1329 is acting as an area of resistance for this market. Very strong support in a zone extending down from 1309 down through to the bottom of the cloud around 1292.